Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's the last trading day of the week. Happy Friday to everyone in the house, and I do hope you had a profitable week as this week was more or less positive for us all in this community. Monitoring three financial instruments, including the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. Though we had a couple of challenges during yesterday's trading session due to some choppy market condition, especially on the US all spot, and I think on the GBP USD as well as on the XAUUSD, where we had some couple of losses due to choppy market condition, which is more or less a reflection of indecision going on in the market, as majority of market participants are looking forward to the US macroeconomic data today, most importantly the NFP, which is expected to bring some fresh impetus into the market. And in preparation for today, I've actually done a comprehensive analysis on all of these assets we are going to that we are monitoring. So stay tuned in, um, exercise patience as we run through this together. And another thing I would like to emphasize is the nature of last trading day of the week, which usually comes with the psychological expectations that market participants will want to, majority of market participants will want to start rounding off their trading activities ahead of the weekend. And we know during this era of geopolitical tensions where uncertainty is the order of the day, no one wants to keep substantial positions open through the course of the weekend, because anything could happen. We could have bullish or bearish gap at the beginning of the week. So as a result of this rounding off of trading activities, we are likely to see profit taking actions, profit taking moves on the chart, as those who had capitalized on a particular direction may want to start taking some profit off the chart, which will reflect on the chart as a retracement move or any form of reversal pattern, that is price action moving in the opposite direction of the prior leading price action. So we are going to be taking all of this into consideration while we review the correct market structure today. So with that being said, here we shall be diving right into the business. For those who join us for the first time, you're highly welcome on board. And what is it that we do here? Well, we gather here 3 times in a week: Mondays, Wednesdays, and Fridays, where we come together to review the asset we are monitoring so far the week and during the course of the week, and see how we can strategically position ourselves for the next move. Now, what we simply do here, we are not a signal service platform here, but instead my aim here is to help you in making well-informed trading decisions using our price action basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action on a daily basis. So I'm very excited to have you around. You are highly welcome, and I do encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first exercise we normally do every day is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Now, so far this week, we've had a bunch of high impactful events, which obviously has influenced the sentiment in the market. In fact, we also had mid-tier economic features during the course of the first half of the week, but I wouldn't be deliberating on that at this point. Now, let's talk about the high impactful events that happened on Wednesday. That was the first trading day of the week, and we had the ADP employment change, which is considered to be a labor sector data, which gives us an insight into how the labor sector of the United States was doing. And from the figures we had, the actual figure came in at 192,000, which was higher than the market expectations, but a little bit lower than what the previous month of March gave us. Then we saw the ISM manufacturing PMI, which is considered a data that gives us an insight into the manufacturing sector, the health of the manufacturing sector of the United States, which came in below market expectation. And if you remember what I told you about the PMI data, it is a gauge that runs from 0 to 100. And anything above 50 is considered as a good signal, as it projects an expansion in that sector. Whereas if the data comes in below 50, then it shows that there is a contraction, which is not really good for the US dollar. And from the data we saw here on Wednesday, it came in at 49.2 as against the consensus in the market, which was tagged at 50, giving us a negative deviation of 0.53. And of course, this had some significant impact on the US dollar. And in addition to that, we had the Fed interest rate decision, which came in just as expected at 5.5%. So it wasn't a surprise at all. So we never expected any significant traction in that regard, as this is what the market had expected. Of course, we know how the inflationary pressure in the United States has been sticky since the beginning of the year, and coupled with that is a very resilient US economy. Then we had the FOMC press conference, where the Fed chairman had the time to give us an insight into the reasons behind the interest rate decisions, the economic outlook, and of course he did answer questions from the media. And one of the major highlights we came up with from the Fed chairman's speech was the fact that he did acknowledge that inflation is still sticky. That is one. And then of course he went on to further say that at this point in time, there is no point considering any form of interest rate cut. And he also went on to negate the idea that there will be interest rate hike in the nearest future. For me, this is a very dovish statement, and of course it has told a lot on the US Treasury bond yield, which has found selling pressure in the last 24 to 36 hours. And we all know how the US Treasury bond yield is directly proportional in value to the United States dollar. If the US Treasury bond yield drops, the dollar is expected to drop, and if the US Treasury bond yield rises, the dollar is expected to rise. So these factors has really affected the US dollar, and today the market participants will be looking forward to high impactful event to further give us an insight into the possibility of the Federal Reserve interest rate trajectory for this year. Now for today, we have a couple of high impactful events that we will be looking forward to, and on top of the list here is the ADP employment change, which is coming up in about how many hours from now? About exactly 3 hours from now. So we're looking forward to the the average hourly earnings. Now the average hourly earnings represent the average amount earned per hour by private sector employees in the United States, and of course this is a crucial labor market indicator, and a higher average hourly earning figures are generally viewed positively by investors as they indicate wage growth and potential inflation, and this could boost market sentiment, of course. Now if we look at the previous data here for the month of April, for the month on month, it comes in month on month and year on year. We have 0.3 and 4.1% respectively for the month of April And for this month of for the month of sorry for the month of March. Now for the month of April, market consensus is looking at 0.3% and 4% respectively. So we look forward to see what the actual data will be like today. Will it be below expectations, beyond expectation, or just coming just as expected? And if we look at the consensus, it's more or less close to what the previous data is, which tells us a little bit of what is going on in the labor sector. So it's more like there isn't really any traction in the last 1 month. So let's look forward to see what the actual data will be, and of course let's make sure we have our timing right so that we can be around to be part of the move when it finally happens. Then another high impactful event today, which is one of the major events for this week that everyone in the market is looking forward to, is the non-farm payroll, known as the NFP. Now, this is another key economic indicator that measures the total number of paid US workers, excluding farm, government, and non-profit organization employees. Now, this also gives us an insight into the health of the labor market and has a substantial impact on market sentiment. Now, generally, a higher than expected NFP figure is typically seen as positive, signaling economic growth, and often boosts confidence of investors in the US economy. And of course, it will dovetail to a positive traction in favor of the US dollar. And if the data comes in below expectation, we're likely going to be seeing a contraction against the US dollar. So let's look at what the previous data says here. We had a 303,000 for the month of March, and we have economists projecting a 238,000 for the month of April. So what does it tell us? It tells us that based on what economists are seeing on ground, there is likely going to be a contraction in the NFP data for the month of April. So it's not a very good signal, which for me at this point may be looking at a possibility of the US dollar going to the downside at this point. So if we see structures and patterns that support the idea of selling the US dollar, it may likely be a very good opportunity to take. However, if the data comes in higher than expected, which usually does, then we may likely see the surprise effect in the market, which could bring a strong positive traction in favor of the US dollar. So we are going to be taking all of this into consideration while we review the current market structure today. Now, finally, today we are looking at the ISM Services PMI, which is gives us an insight into the service sector in the United States. So it tells us how healthy the service sector is. Now, a higher than expected figure signals economic expansion, hereby boosting the sentiment in the market as well. Now, this is, like I told you earlier, the PMI data is usually a gauge from 0 to 100, where anything above 50 is considered as an expansion, where anything below 50 is considered as a contraction. Now, looking at the ISM Services PMI here, the previous month came in at 51.4. That's higher than 50, and economists are projecting 52, which is also higher than the 50 mark, and of course higher than the previous month. So everyone, they are thinking that there is going to be a little bit of expansion in that particular sector. So we're going to be looking forward to this data. And one thing I usually state here, though it is considered to be illegal, these major key players in the market do have inner cycles within this department that gives them first-hand information of what the data is likely going to be like. Now, due to this information they have, they usually build up a position ahead of the event, and this position gives us an insight into what is likely going to happen, what is going to be the reaction of the major key players in the market. And this position, this building of position reflects on the chart as patterns and structures that we technical traders use to strategically position ourselves for the next move. So what we are going to be doing here today, basically, is to run through the charts and look out for such structures that we are going to be using to strategically position ourselves for the next move. So join me as we run through the chart and see how we intend to capitalize on the last trading day activity. I see your comment, Simasiku. Good morning to you. Glad to have you around. Bless you too as well. So with that being said, here we shall be diving right into the business, and as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. Now on the USOILSPOT, we've had a tremendously profitable week as we capitalized on that strong bearish momentum all the way to the downside. Not only that we capitalized it, we also maximized the potential of the bearish move as we had multiple sell entries, 1 2 3 4 5 6 sell positions through the course of the week, and this had given us some significant amount of profit. Now for those of us who missed out on our first day analysis on the USOILSPOT, let's quickly run through what really happened at the beginning of the week that led to the decisions we made. And please, I would like to state here that I wouldn't be going through the higher time frame. So during the Forex Morning Mastery, we usually focus on our execution time frame, which is the 1 hour time frame. Now if you do want to have an insight into the background of how we got to this point, then you can check my video on Monday on the USOILSPOT, which is right in the description box of this current video you're watching. So you can check it out after the live session, so you can have a better understanding into how we got to this point. So let's zoom right into the beginning of the week. Now at the beginning of the week, during the first 8 to 12 hours of the week, it was more of price action trading below our key level, which was situated at the $83 area. And you know how we use our key levels. When price action remains below the key level, we look out for structures that support the idea of selling. But if price breaks out of our key level to the upside, then we want to be looking out for patterns and structures that support the idea of buying. Now with a range bound structure identified during the first early hours of the week, as we saw price confined within the $83 level and the $82.67 area to give us an insight into the prevailing uncertainty in the market at that particular point in time. Then in addition to the fact that price action was confined within a range, it was more or less trading above the ascending trend line we spotted on the 4 hours time frame. And due to the fact that price was trading above the ascending trend line, you know how we use our ascending trend lines in this community. As long as price remains above them, we definitely want to be looking out for patterns and structures that support the idea of buying, and the only condition that will make us sell is for the ascending trend line to be breached and broken to the downside. Now with the situation we had here, we positioned ourselves above the resistance line of that range bound structure to capitalize on the first buy position for the week. We had the first buy position triggered. Price moved about 60 pips thereabout before the selling pressure resumed. And of course, you know, when price action moves in our favor, we move our stop losses, secure the current position, but unfortunately we were taken out with some moderate size of profit as we saw selling pressure come in. Then we had another buy position triggered again with the hopes that price is coming back to retest the structure in an attempt to continue the uptrend move, but that obviously failed, leading to our first loss for the week. Now price dropped from that point and we saw price drop down, breaking down both the ascending trend line we identified on the higher time frame and of course the support line of the range at exactly the $82.67 area. And I did mention, I gave us an update on my TradingView and Telegram platform that for those of us who had missed out on this opportunity, a retest of structure will be a good opportunity to join the downtrend move. And for this fact, we saw how price continued to drop to the downside, giving us more opportunities to maximize this move as we had levels such as the $82.10 level. We also had it more at the $81.50 area. We had it at the $80.40 area. We also had it at the $80.04 level. And of course, we also had it one more at the $78.75 area. So it has been quite a profitable week for us all on the US Oil Spot. Well done to everyone who did capitalize and stayed faithful to our analytical approach. Now, during yesterday's session, I did give an update on the 15 minutes time frame after observing the consolidation phase that was going on through since the beginning of Wednesday's trading session. And right on the 15 minutes time frame, let me show you quickly. I did identify a flag pattern which I said that we are going to be using to navigate the current market structure during the early hours of yesterday. Now, after considering this impulsive bearish leg, we saw price action fall into a consolidation phase, giving us what is looking like a flag pattern. And whenever we identify a flag pattern on the chart, it's more or less a sign that price may likely continue to the downside. And of course, I did mention that we should be positioning ourselves right below the $72.20 area to join the downtrend continuation. And of course, we saw price move significantly. We saw price move about over 100 pips thereabout. In fact, we had two sell positions triggered along the line before the bullish momentum came in, and I do hope you moved your stop losses accordingly like we usually do when price moves in our favor. And if you had done that, well done to you, as you must have been taken out with a reasonable amount of profit. Now, as the day draws near, as we gradually approach the US NFP and of course the end of the trading week, how do we intend to manage our positions today? And of course, before we talk about managing our positions, we also need to have an insight into the driving factor of this current market dynamics. What are the things that has been driving the sentiment in the market? All of a sudden, the market has been going bearish. Remember, we have been buying the US Oil Spot prior to this, like for the past 3-4 weeks, 5-6 weeks, we have been buying the US Oil Spot, and all of a sudden price is dropping to the downside. Why is that? Well, one of the major factors that has been supporting the ascent of the US Oil Spot is the geopolitical tensions in the Middle East, from the Israel-Hamas situation to the Israel-Iran situation, and of course the Houthis on the Red Sea. Now, however, since the beginning of the week, there has been an insight into the easing of geopolitical tensions in the Middle East, coupled with the potential for a ceasefire between the Israel and Hamas situation in Gaza. And we saw signs that Hamas are considering the offer on the table as regards to the hostages and of course ceasing of fire by the Israeli government. And this of course has incited the idea that there wouldn't be oil supply disruption from that particular area. And due to this, majority are beginning to take some profit off the market, as we may see price crash to the downside. Then another factor that has supported the descent of oil prices this week is the increase in crude oil inventory in the United States. Now, both the API and the EIA reported an astronomical rise in their stockpile for the previous week. The EIA on Wednesday reported about a surge of 7.256 million barrels for the previous week, which is the highest increase since the month of June of 2023. Now, this data here raises concern about weakening oil demand, because when there is high crude oil stockpiled, then it shows that the demand is not strong enough to eat into the supply. And our simple economics, like I usually say, when we have high supply and reduced demand, what happens? Price will definitely drop. So these are one of the major factors that have been driving the sentiment away from crude oil prices. So with this all understanding in mind. Then another thing that is also that's influencing the oil prices dropping is the fact that the Federal Reserve have maintained interest rate at their 5.25-5.5% rate. And of course, we learned that the Fed chairman emphasized that there wouldn't be any form of interest rate cut anytime soon. And what does this mean? If interest rates remain higher, that means the value of the US dollar will continue to stay high, and it becomes expensive for other currencies to buy. Now, considering the fact that the US oil spot is a US dollar denominated asset, those who want to buy the US oil spot will find it very expensive. This will further reduce the demand for oil, and if the demand for oil reduces, there will be increase in stockpile, and this is high supply, and price will continue to drop. So these are the major factors here, and in fact, based on what I've said so far, the path of least resistance is looking bearish. However, we cannot ignore the possibility that the tension in the Middle East could still escalate, because anything could happen. We do not know. During the weekend, anything could happen, and this may likely incite concerns about oil disruption, which could incite increased demand and of course push price to the upside. So we are not going to ignore the possibility that buyers could also come in at any point in time. And of course, today too is the last trading day of the week. We could see profit-taking activities going on in the market, which could result in price moving to the upside. Now, let's look at things from a technical standpoint, and the technicalities of what we see on the chart will tell us how market participants are weighing their options using all of these factors that I just mentioned here. Now, let's zoom into the structure and let's look at what has been happening in this market since the beginning of the week. Of course, the first thing you would observe here is that the market has been very bearish. And to further emphasize this, you will see after connecting the series of lower highs, we have a beautiful descending trend line to work with, as you will see here. In fact, we have two of them. This is the first one right here, and we have another one right here which supported the bearish momentum throughout the course of the week. And you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we will continue to look out for patterns and structures that support the idea of selling, and the only condition that will make us buy is for this descending trend line to be breached and broken to the upside. Now, for the fact that price remains below the descending trend line, of course, we should be looking out for selling opportunities. However, if we zoom into what has been happening in this market in the last 48 hours, you would notice that sellers have been struggling to continue the momentum. Look at what happened here between that level at the $78.75 area and the $78.25 level. We have been seeing buy pressure come in from that area. Now, every attempt by the sellers to break through the zone has been met with stiff resistance from the buyers, which for me is a red flag that we might be seeing a reversal setup evolve from this area. Now, another thing we should also consider here is the fact that today is the last trading day of the week. And remember what I said earlier, that on last trading days of the week, we tend to see market participants take profit of the market, especially in an era where uncertainty is the order of the day. And due to this, we may begin to see some profit-taking activities happen today, which could incite a reversal setup on the chart to give us an opportunity to buy. Now, let's look at what the technical structure here is saying. And if I look at this closely, it's looking more like a reversal setup in the form of a head and shoulder pattern. Though it's not yet formed, we can see something like the left shoulder right here, the head right here, while the right shoulder is yet to evolve, and the $79.50 level will be serving as the neckline, where the breakout of the neckline would also have broken out of the descending trend line, triggering the idea that we are getting ready to buy, and the breakout retest will be all we need to join an uptrend continuation. So let's hope that this is going to form. You know, most of the time we have the setup, it doesn't go on to transition to maturity. But let's see if this happens. This is one of the ideas we are going to be looking at to join an uptrend move. So that means we will be seeing profit taking activity. So to buy the US oil spot today, we would like to see the descending trend line breached and broken. And of course, we have a level at the $79.50 level which will be helping us to guide this idea going forward. So we are not buying unless price action breaks out and retest the $79.50 level. So that is the idea of buying the US oil spot today. Now, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could continue in this market. And if this happens, I want to see the fact is price is still trading below the descending trend line. So bearish expectations are still valid. So the only condition for me to sell today is for the lowest point for this week at the $78.25 level to be broken to the downside. And once this level is broken, then at this point we are much convinced that buyers may have lost that momentum, and then we will join the bearish move to the downside. So this is my simple view on the US oil spot for today, as our center of focus will be between the $78.25 area and the $79.50 level. That's like a $1 range structure that will be guiding our decisions for today. So let's see how the market will react to the zone. Are we having a breakout of the structure, or are we having a breakdown of the structure? Within a couple of hours, we should be having an answer on that one. So if you have any questions whatsoever as regards my explanation, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys, while you use that time to also mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. See you on the other side, and please do not forget to give the video a thumbs up if you have found this content helpful and useful. It goes a long way in helping and supporting this channel to grow, and thank you very much as you do so. All right, so I see you, Soldier Pete. Good morning. I'm glad you found this session helpful. Thank you very much. I do hope you've clicked on that like button. Thank you very much as you do so. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next financial asset on our watch list. So The next asset we are going to be looking at this morning is going to be the GBPUSD, and we've had a roller coaster of buys and sells and buys and sells, and finally buying again through the course of the week, which of course has projected the prevailing uncertainty in this market as the participants in this current market structure weigh in the various fundamentals behind the scenes, which is driving the sentiment in this particular market. Now, at this point, the pound is still if we look at what the performance so far this week, I think the pound sterling has gained some significant traction compared to where price action started at the beginning of the week, and this is amidst a softer US dollar following the dovish stance of the Federal Reserve on Wednesday's trading session. And I did mention earlier how the Fed chair highlighted the unlikelihood of a future rate hike, and of course interest rate will be maintained higher for an extended period of time considering the inflationary pressure in the United States and the US resilient economy. Moreover, the timing of the rate cuts will be contingent upon incoming data, with a particular focus on the US non-farm payroll. And this is subject to what the Fed chairman said on Wednesday, where he said depending on what the data says will determine if there will be rate cut. But for now, there is no rate cut, and he went on to top it with a dovish statement that there is no rate hike. And this has further exerted selling pressure on the US dollar, which is in favor of the pound sterling. Surprising, isn't it? Remember, the Bank of England during the previous week announced that that they will be considering cutting interest rate due to the fact that inflation is thinning out in the United Kingdom economy. Now remember, next week is the United Kingdom's version of interest rate announcement. Everyone will be looking forward to that one, but I doubt if there will likely be any interest rate cut next week at all. I don't think so, but let's see what happens. You could get surprises, you never can tell. But at this point in time, the market will still be very, very cautious in making any informed decisions due to the anticipation of the interest rate decision from the United Kingdom next week. But the focus today will be on the non-farm payroll, which will be giving us an insight into the trajectory of interest rate path for the Federal Reserve. However, before we go into the details here, and for the sake of educational purposes, let's run through how the week began, what happened during the course of this week. Now, at the beginning of the week, we had a huge range-bound structure where price action started the week around the 1.248 and then culminated at the 1.25480 area, breaking out of our key level that we identified at the 1.25350. Now, for those of you who do not know how we identify the key level, please check out our video on Monday on the GBPUSD. The links are right in the description box of this current video you are watching. So check it out to understand how we got to this point you are seeing on the 1 hour time frame. So with this observation at the beginning of the week, following a strong impulsive move to the upside, we decided to join a buy opportunity at the breakout of this range bound structure. So we had our first buy position for the week right at the breakout of the key level at the 1.25350. You know how we use our key levels. Price breakout, we want to be buying, of course, and then we saw price breakout this other level at the 1.25480, giving us a total of about, the first one was about 35 pips, the second one was about 20 pips there, about a total of about 55 pips before the bearish momentum came in. And with our stop losses move to secure positions, we were taken out with a moderate size of profit. Then we had the privilege of joining again, but the second position did not do well here as we saw price drop down, hitting our stop loss on that one. And then we had the privilege of joining another sell position right here at the breakdown of the 1.252. We run that momentum all the way to this point before another wave of bullish momentum came in. So it was a roller coaster of buys and sell during the first half of the week. And then right here on during our Wednesday's live session, for those of you who are part of our live session on Wednesday, we begin to notice that sellers have lost the steam again, as we saw that as soon as price came back to where it started the week around the 1.248, we begin to notice the formation of another reversal pattern in the form of a double bottom structure. Now look at this. We had this impulsive move all the way down. We saw price come into the structure, something like a reversal pattern. So I immediately identified this level here on Wednesday at 1.24975, where I said we will be buying the breakout of that structure. And of course, we saw price break out of the structure, came back to retest the structure a couple of times to continue that uptrend move. Now yesterday we had some sell positions. I did updated us with structures on the 15 minutes time frame which supported some sell positions, and I think we had a stop loss hit at that point. We had one stop loss on the GBPUSD yesterday before this bullish traction resumed. Now for those of us who are still in a buy position on this one, I did mention in my commentary this morning that we do want to be moving our stop losses. Let's secure this position as everyone looks forward to the NFP data for fresh impetus into this market. And like I said earlier, if we get any surprises, that is data comes in higher than expected, we tend to see a strong decline to the downside today. So if data comes in higher than expected, this is likely what will be happening. So at this point, please kindly move all your stop losses. Let's secure this current position, and let's see how the market will play. And one of the reasons why I say we should secure position is this. Now if we look at the nature of trading activity since the beginning of the week, you will see that the market has been more or less range bound between the 1.257 and the 1.248, giving us a wide range bound structure, which further emphasized the prevailing uncertainty in the market. Now the price is gradually approaching the resistance point for this week at the 1.257, which has been known to be a strong selling niche in this market since the beginning of the week. We may likely see price drop from that particular area. So how would I implore us to secure all positions? Let's see how the market is going to be reacting to the zone, which is between the 1.257 and the 1.25480. If we see or sight any form of reversal pattern around this area, maybe in the form of a double top, head and shoulder, or a rising wedge, then we will be getting ready to join the decline to the downside. Then another thing I would like to emphasize here is the ascending trend line we identified on the 4 hours time frame. Now look at this. This is the extension of the ascending trend line, as you will see here. So, and you know how we use our ascending trend line. Remember, this trend line here has been guiding bullish momentum before it was breached and broken to the downside on Tuesday before the Fed interest rate decisions was announced. Now price came back to retest it, came back down again, and is gradually going back again to retest it. So if it goes back again and buyers find it difficult to break out of this area, the appearance of selling pressure will be a beautiful opportunity to join the decline to the downside. But if price can break out of the trend line, I'm of the opinion that we may see a rise in the pound sterling ahead of next week's interest rate decisions. So this is what I'm looking at here today. So the first thing we are going to be doing right now is to move all stop losses. Let's secure the current buy position, and let's wait to see how the market is going to be reacting to this range between the 1.257 and the 1.25480, which I highlighted with that red rectangle you see on your screen. So depending on what happens here will determine what our next course of action will be. So this might likely take 2, 3, 4 hours before it happens. So let's exercise patience, secure your positions, and let's wait and see what will happen. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update as at when due. If you have any questions whatsoever as regards to my illustration so far, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions while you also use that time. Mark out these levels, secure your position, and let's exercise patience to wait and see how the market will react to this range bound structure we've identified here. All right. So, in the absence of no questions, I want to take this as a confirmation that we are all on the same page, and all I have explained so far has been quite explanatory. I do hope you're marking out these levels accordingly on your chart. They are very, very important as they will be guiding our trading decisions going forward. So thanks for those of you who had clicked on the like button. Thank you very much. I really do appreciate. And for those who are yet to, please, it doesn't cost you anything. Smash the like button using Soldier Pete's word, and thank you very much as you do so. So with that being said, let's move right into the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And we have quite an interesting situation going on in the market this week. We've been definitely profitable. We joined the first 3 days of the week was more of a bearish move, and of course the second half of the week began with an uptrend move, which of course we did capitalize on as well. Now, for the sake of clarity, educational purposes, and for those who had missed out on our earlier session, let's quickly run through how the week started with us in this community, what led to the decisions we made. Now, at the beginning of the week, for those of you who are familiar with my weekend video on the XAUUSD, remember one of the major highlights in my video on the XAUUSD was the downtrend continuation pattern we identified on the higher time frame, which came in the form of a flag pattern. Now, to give a visual representation of what I'm talking about, we had this impulsive move to the downside. Price transitioned into a consolidation phase, as you will see here, giving us a beautiful downtrend continuation pattern in the form of a flag pattern. And of course, whenever we identify this kind of pattern, we expect that price will continue to the downside, and we were looking out for a breakdown retest of that structure to give us the opportunity to join the decline. Though we joined very, very late, but we were able to capitalize on that bearish move to the downside. And of course, we had multiple entries, of course, to maximize that bearish momentum. As you will see, we had levels like the 2,320, the 2,313, 2,305, $2,293.50 level, all of which we did use to join the bearish move to the downside. And of course, we were able to scoop in close to 800 pips on all those multiple entries. And of course, we saw the buy pressure resume here. That was on Wednesday. During our live session on Wednesday, we talked about this together here. I think I had a new chart to, let's see, I think I had a new chart on that one. Hold on a second. Let's see. I can remember but I think we had a structure on the 15 minutes time. I must have deleted it. We had a structure on the 15 minutes time frame on Wednesday. Okay, here it is. Now this was it on Wednesday. So we had a beautiful structure here on Wednesday on a lower time frame that we said we will be using to guide our trading decisions. And of course we saw this descending trend line here. We saw the emergence of a reversal pattern where the inability of price action to break through the $2,283 area, this level here, we saw that price was unable to break through that structure, and during the process we saw price action transition into a reversal pattern in the form of a double bottom structure. So immediately I noticed this, I shared this with us on both my TradingView and Telegram platform, that we will be joining the breakout of that neckline at the $2,289 area. And since that moment we kept on adding more positions. We had multiple levels as we rode that momentum all the way to the upside. So it has been quite a profitable week for us all on the XAUUSD. Now during yesterday's trading session, during the later part of yesterday, on Thursday, exactly during the morning on Thursday, we had the privilege of joining a bearish move. Unfortunately, I didn't know that I did not share this in public, though we had this worked out with people I work with behind the scenes as we capitalize on that strong bearish momentum on Thursday. Let me show you what we saw. It was later in the day I realized that I did not share it, and it was too late for me to share it with the general public. But we did work on some reversal pattern around this area after identifying a sell window here, after taking into consideration the bearish impulse leg. So after using my Fibonacci retracement tool, running it through the previous impulse leg, we aimed at that area between the 50 and the 78.6% of the previous impulse leg, where we looked out for selling pressure to join the decline to the downside. So I'm sorry guys, I didn't share this. I thought I did, but unfortunately that did not happen. So it's all fine and good. So yesterday I updated us with a structure which I saw on the 15 minutes time frame, which is going to be guiding my decisions for today. Now let's quickly run through that and see what I am talking about here. Now it's on the 15 minutes time frame. I shared this yesterday, and I saw an inverse head and shoulder pattern after price dropped into the stocking their gold reserve, and this of course has resulted in the escalation of gold prices. Then further on, the US dollar has been a major factor driving the gold. Now, despite a less hawkish outlook from the Federal Reserve, investors remain convinced that any rate cutting action by the US Central Bank will likely commence in September or the fourth quarter. So that's a long time. So there is no interest rate cut at this point in time, which usually favors the ascent of the US dollar. But in the gold market, the case is contrary here, as the sentiment coupled with an overall positive risk appetite act as an obstacle or resistance to the upward movement of safe haven assets such as gold. Now at this point in time, you will see that in the last 24 hours the market has been consolidating just around that psychological area at the $2,300 zone, giving us an insight into the prevailing uncertainty in the market at this point in time. Now, I still think that the reason why we're having this range-bound structure is due to the anticipation of the NFP data, as major key players may have stepped aside from the market, waiting for fresh impetus from this data before placing any aggressive bets. So the stepping aside of the major key players in the market has resulted in low liquidity in the market, giving us this consolidation phase we're seeing here in the last 24 hours. Now, there is something I would like to share with you, which is on the 4 hours time frame. I saw this yesterday evening, and I would like to share it with you here on the 4 hours time frame, so we can have an holistic perspective into what is really going on in this market. Now, looking at the 4 hours time frame here, this is what I was able to come up with. you see it's a clear, distinct that price action has been bullish. However, since the beginning of the month of April, we saw how that area between the 2,300 and the $2,270 area has played a major role in negating any attempt by the sellers to drop to the downside. So every point in time we see sellers come into the structure, we saw buyers come over to take the price back up. So I think majority in the market are seeing prices within the 2,300 and the 2,270 as cheap enough to buy. Though we have lower highs at this point, we have lower highs, of course. You can see this descending trend line is supporting that, but we still cannot jump into a sell right away, as price action is still sitting above a robust demand zone between the 2,300 and the 2,270. Now, the only condition that will make me sell and feel comfortable selling is for price to break through the structure, or most importantly, that $2,300 area, before joining the decline to the downside. Now, let me zoom into the current structure here. Now, let's zoom in. As you will see here, we have been seeing buy pressure again. This is the demand zone, that gray area you're seeing on your screen. That's the demand zone, and when price remains above the demand zone, we have no business selling. We do not want to be selling in an area that is known to be a strength for the buyers. So if we are buying here, I do have a simple setup, and in fact, if price can break out of this descending trend line, I think price will skyrocket to the upside as market participants round up this week. I still think the path of risk resistance is looking bullish, so we are going to exercise patience anyways and see how what the US NFP data will come up with today. If we have a resilient labor sector, then we might likely see price drop. But if we have data coming just as expected or below expectation, then we may likely see price climb to the upside. Though this is subject to how market participants react to whatever data that comes in. So now, to guide our decision around this demand zone area, as you will see, price has been traded around the 2,300 in the last 24 hours, giving us clue of how crucial that level is. Now, this morning I updated us with a simple trading setup that we are going to be using to guide our decisions for today. So this is the 2,300 level. I did identify on the higher time frame, buttressing, serving as a yardstick for that demand zone. We identified on the 4 hours time frame. So this is what we have, and in the last 12 18 hours, price action has been confined within the $2,291.50 level and the $2,308 area. So at this point in time, we have no choice than to exercise patience and wait for the market to give us a signal of where it tends to go, it wants to go. So is it going to the upside? Well, a breakout of the 2,308 will be a good opportunity for us to join the uptrend continuation. And if price breaks down the $2,291.50 level, then I would like to join a decline to the downside. And of course, I will be giving you updates on multiple levels that we will be using to maximize whatever direction the market will go. And the XAUUSD live monitoring window will be coming up today. So for us, if you try to be part of that session, it's kickstart about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volume of trading activity for that day. So the link you will be seeing at the end of this video, once this video ends, you will be seeing the link to the XAUUSD live window. Click on the link, click on the notify me button so you can get notified as soon as we come on live. So this is my simple view on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So don't forget, let's give the video a like, give it a thumbs up. We have over 8 people on board right now, though we had about 10, 12 before, but it has dropped again. So if you are still on and you're here to click on the like button, it goes a long way in helping this community to grow And thank you very much as you do so. And for those of you who had clicked on the like button as well, thank you very much. So let's see if there are any questions before we start rounding off our Forex Morning Mastery session for today. And I will be taking the next 10-15 seconds off. Use that time to mark out those levels that you've seen on your chart, as we are going to be needing them as a reference point to guide our independent trading decisions for today. See you soon. All right. So in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. I really enjoyed every single moment with you. And today we were able to take on all the three financial instruments on our watch list for today, which includes the USOILSPOT, the GBPUSD, and of course my favorite amongst them all, which is the XAUUSD. And we were able to identify simple trading setups that we are going to be using to navigate the current market dynamics as market participants look forward to the US NFP data, and of course rounding off their trading activity ahead of the weekend. And we did took into consideration the possibilities of profit-taking activities as market participants closing their positions ahead of the weekend. And of course, we also took into consideration the fundamental factors behind the scenes, which we use to understand the behavioral patterns of how market participants are behaving in each market structure. So I do hope you all marked out the levels and structures we identified on the chart. If you have done so, well done and kudos to you. All we need to do now is exercise patience and let's allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess. And with this understanding in mind, you do want to be having a well-defined risk management strategy in place. It has been a tremendously profitable week for us all. And for those of you who stayed faithful with our analytical approach and stayed part of this profitable journey, well done and kudos to you. So let's see how today is going to play out. We're going to have the privilege of replicating and in fact increasing our profits on all of the assets. Let's see. For those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions. So I would love to see you same time next week, Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well the asset have been doing and of course prepare ourselves for the new week. And if you're yet to subscribe to this channel, please do right away, as I will be sharing my ideas for next week during the weekend on what my plans are, the asset I'm going to be looking at, what my thought process are on this asset. Click on the subscribe button, click on the notify me button so you can get notified as soon as I drop new content. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, and I wish you a great weekend as well. Bye.